Hi, everyone. Thanks for joining. We're going to wait another minute to keep letting some people in. All right, we'll go ahead and get started. Thank you, everyone, for joining us for the Dynamic Allocations webinar. I'm just going to go over a few housekeeping before we get started. If you go, there we go. So if you have any questions, just please put them in the Q&A chat box at the bottom of your Zoom, and we will wait to the end to answer all of those. And today's recording and slides will be emailed to you after the webinar is ended. And this webinar is CPE accredited, so if you want to earn that 1 CPE credit, you need to answer 3 out of the 4 polling questions that will pop up throughout the webinar, complete the survey that will pop up after the webinar has ended, and stay on for the duration of the entire webinar. If you have any issues, please put them in the chat, the Q&A box, or you can email me at kfredericks@jmtconsulting.com, and we'll get it figured out. And with that, I will turn it over to you, Hank.
Okay, thank you very much, Kristen. Okay, so a little bit about JMT first. No, this isn't the presidential election map, but what it is where all our clients are as we serve over 2,000 people across the United States. And we're right there in the middle of the Midwest in Nashville, Tennessee, Music City. JMT was founded in 1991, and we've been exclusively dedicated to serving the public sector for over 32 years. Wide variety of nonprofits, including human services, healthcare, education, arts and culture, faith-based, and more. Our mission is to empower our clients in achieving their mission by understanding the critical role of the back office function. And then our vision is that we aim for a holistic back office that eliminates operational barriers, providing seamless access and visibility to essential information. We feel that we're beyond transactional improvements and focus on deeper contributions of finance and operations. We have a customized approach. We don't do a cookie cutter implementations because every project is uniquely tailored to your all's needs to meet the client's specific needs. We have several business partners that we work together with, multiple vendors to evaluate, design, install, and support the best technology solutions for our clients. And then today, we're going to go ahead and discuss dynamic allocations and how it can revolutionize your back office operations, providing timeliness and visibility to the information your organization needs to thrive in. So, like I said, we're focused on who and how we serve. You know, by helping you in your automation, we can decrease the time needed in the back office so that you can serve your clients, as that's what your desire is. You don't need to be bothered by, the back office and all that. You need to serve your people just like we need to serve you. So we're here to provide you a summary and guide you through the intricacies of Sage Intacct Dynamic Allocations. And so before diving in, let's go ahead and just look at a couple of our services and partners. So our services, we implement and support cloud-based ERP solutions with both Sage Intacct and MIP. We implement support budget management solutions with Martus and Vena. We also provide outsourced accounting services, as well as performing accounting operation assessment work. We like to assist with system integration, and we're in grant management as well. JMT, makes implementing a best-in-class ERP and FP&A solution accessible for any nonprofit. We will help you choose and integrate the right software to run your nonprofit. We like to work with the best software vendors to provide tailored solutions to you. And we carry our products from multiple vendors. By doing so, enables us to integrate them into a solution that's perfectly matched to your needs. One more big plug-in before we go ahead and get started is every year we have a Innovate conference. This year just happens to be right here in Nashville. It's a big growing city, so many of you all will love coming to visit Nashville. And here at our annual conference, what we do is we tailor it specifically for all nonprofit finance professionals. Attendees will have the opportunity to immerse themselves in the latest best in-class nonprofit financial process and management software, as well as gain insights from leading nonprofit experts. The conference aims to showcase how better technology can lead to greater efficiency, and effectiveness to fulfilling your organization's mission. It's a perfect platform to learn, network, and explore innovative solutions to enhance your back office operations. And I would love to have the chance to meet each and every one of you all here in person, instead of being hidden behind the screen or the PowerPoint slides. And then if you do come, come up and say, yeah, we heard you speak, and introduce yourself. I would enjoy that. So right here, another person that's on the call with me right now is Taylor Boss, our service delivery manager. She's very good at what she does, and she helps a lot of clients. She's got a tremendous amount of experience, and she knows the Sage Intacct solution up and down like no other. And then my name's Hank Wright. I sent this image through artificial intelligence. It doesn't seem to be doing as good a job as I thought it was. I still got a few wrinkles, a little bit of gray hair, but that's okay, another day. But anyways, I've been in the IT and the accounting business for probably well over close to about 35 years. I've dealt and integrated with all the top accounting packages that are out there. And I have also written full-blown accounting systems that's probably been used by 500 to 1,000 different customers throughout the United States. So I've got a very good background in both the financial side as well as the technological side and the IT side. So today's agenda, I'm going to just do a brief little history on financial allocations. I'm going to talk about Sage Intacct, transaction allocations versus dynamic allocations. We're going to talk about, before we get started, doing the configuration. We're going to go out onto Sage and generate an allocation so you can see what's happening. We'll go over some of the general ledger reporting options, and then we're going to go over best practices for managing and maintaining dynamic allocations to ensure your accuracy and consistency, and then we'll finish up with a summary. So basically, I said a little humorous there. We can, go all the way back to Mesopotamia, about 3000 BC, where the first accountants, emerged. They were not using spreadsheets, but they had clay tablets and chisels to do all their budgets and so forth. It wasn't too long after that where the Roman Empire came in, and they had what was called quaestors, which in Latin means investigators. And that's what we are as far as financial analysis people. We need to investigate the books. We need to find out what is possibly wrong, where it's wrong, because, so that we can make sure that everything that's presented to us is correct, so that we can make informed decisions, strategize, penny pinch where we need to, and make sure that we're within the budget and all that kind of thing. And then a little bit farther along the lines, we got the Middle Ages, where you have the monks working under candlelight underneath the big cathedrals, and everything they did was, divine inspired, if you may. But now we're in the digital world, and Sage Intacct handles what used to take an army of scribes and accountants. We've come a long way from the clay tablets and the quill pens. So these tools have evolved. The challenge of wisely distributing resources has been with us throughout history. It's becoming a little bit more automated and handled a little bit better with Sage Intacct. Dynamic allocations in Sage Intacct involve automatically distributing costs and revenues across various departments, projects, or entities, also known as dimensions, based upon predefined criteria. And this helps ensure that the financial resources are appropriately assigned and reported. And that's crucial because they reduce manual errors, save time, and provide real-time insights into financial performance, which enhances decision-making and financial planning. And again, it helps free you all up so that you can work with your clients and pay a little bit of attention to them and help them and give them all that you can. So by automating these allocations, like I said, organizations can maintain more accurate and up-to-date financial records, leading to better resource management and strategic planning. Okay, so there's two different kinds of allocations. You got transaction allocations, and then we have dynamic allocations. So back earlier when I was writing software, I did a good bit of the transaction allocations. It saves you some time and it helps you out a little bit, but it's not automatic. It's still a little bit error prone. So if I had rent and I wanted to divide that out into 100 stores, I would equally divide it out, whatever it is, divisible by 100, and automatically create the journal entry, which would then apply to each of those stores that rent. And the transaction allocations here in Sage is pretty much about the same thing. It is standard out of the box. So all of you all have this as it is included with the core. And it can be defined to distribute amounts across multiple dimensions based on preset percentages. And it can allocate a percentage. It can set absolute values or a fixed amount, and it can use over-under logic. The other thing that's fairly nice about the transaction allocations is that it can be used in both the GL, AP, accounts payable, accounts receivable, and your purchase areas of Sage. So transaction allocations, anytime you can save a minute, 2 minutes, 3 minutes, it's a win situation because it's just not then when you're doing the transaction, but it's also down the road because you're not going to have as many errors that are going to come place. And transaction allocations might be where you distribute, little things like postage, like I mentioned earlier, rent, some of the easier things that are able to be dispersed out across your statements. Dynamic allocations, which is what the conversation or the meeting or the seminar here is about, and this is pretty nice with what Sage does, is things can change. The amount that you distribute can change. You can look at a variety of things that are going to help you disperse that, be it hours, be it salary, all kinds of stat type items. If you're in the healthcare, maybe you want to use number of beds, maybe the number of meals that you might serve. So you can do a lot of stats if you want to bring in your payroll, like I said, hourly, salary, which is one of the things that I'm going to do. There is a subscription that's required for dynamic allocations. So it is an additional price. And it includes the setup of an allocation template so that you can routinely generate allocations without having to redefine the calculations every single time. And then they're applied after the fact and on a periodic basis or whenever it is that you decide to do it. The other thing that is a little bit different is it is applied to GL balances or activity. It is not utilized in your subledgers, accounts payable, accounts receivable, and your purchases. So every once in a while, you're going to see a polling question of which Christian, who's also on this call, is going to take care of. Well, that's great. I'm getting nervous. I'm seeing like about 30 or 40 people here. So this is a good turnout. That's great. And Kristen, I don't mean to bother you. You going to end the poll and I just move on, or?
Yeah, I will.
Okay,
I'm gonna
thank
end
you.
it right now.
Okay. Okay, so let's just go ahead and get back to the transaction allocations just to talk about it a little bit, because all of y'all out there right now have this as part of Intacct, if you have Intacct. But they're intended for use during transaction entry. So it takes place as you enter an accounts payable invoice, as you enter an accounts receivable invoice, a purchase, or you're doing a journal entry. Because once you punch in, let's say, I'm doing an accounts payable invoice and I punch in my rent account and then I punch in the amount. At that point, I'm going to go ahead and say, okay, let's use the rent allocation, which then we've programmed that prior to doing that. And it might be similar to what you see here on the screen. Let's just say rent's $1,000. And we might say, I want 50% to go to Department A, 25% B, and as well as C. And then what happens is it's going to go ahead and take that amount you put in there, automatically generate four more lines. One would be a debit to take care of the credit, or excuse me, a credit to take care of the debit as far as the rent goes, and then apply that to the other three departments, same chart of account code. So pretty basic. All of y'all might be using this right now, and as I said, it is part of the core functionality of Sage Intacct. And then we have dynamic allocations, which is an additional, like I said, additional subscription and offers easy setup with dynamically changing. And we're going to go over some of this terminology right here, the basis, routine processing, and a click-through history to make it easy to see how allocations have been derived and applied. The results of a posted entry, provide a rock-solid audit trail, and we're going to go into that to show you how that's done for each allocation for full visibility into how the math was derived, including drill down to the source, basis, and dynamic split calculation amounts that Intacct found and calculated throughout that allocation. So you're going to hear some of these things that I'm going to go over right now. So right now we're going to talk about a source. So that's where the amount we're going to distribute. So earlier I talked about rent, but what I'm going to show you today is like fringe benefits from payroll system. And I'm going to take 5 different accounts, and those are going to vary, each month. And, Sage Intacct's going to go out and total up all 5 of those accounts to determine what the source amount is. Then you have the basis, and the basis is how we're going to allocate the distribution against that source. So a basis might be the salaries. So we might total up, you might have different salary type classifications, maybe, kitchen help, you might have managers, you might have, other leadership, and they might each have different types of, salary that's out there, but all the salary is totaled up. And then say the manager division is divided into that total salary that computes a percentage, which then is applied to that source. And that is then distributed to the target account that we also see on the screen, which was going to go to, I mentioned fringe benefits. So it'll go to fringe benefits for, managers, or fringe benefit to another category or another area, or, and things like that. So it's dynamic because it's ever changing. And it just makes it very simple for you all once you get started and get it up and running and designed. Anything that you're gonna do, you have to go ahead and map it out and think about it. You're not going to be right the first time, but you're going to eventually see how much it's going to help you and where you need to make changes and such like that. It'll drastically improve and take away time away from the financial statements, and again, get you back to serving your clients. So before we start, there's a couple things that would have to be done. Like I said, you have to subscribe to it because it is an additional subscription. We have to specify our user types and as well as our permissions. And then one other thing that's necessary is that we have to have a user-defined book. Some of you all might be, you've seen the accrual. You have an accrual book or you got a cash book. It can't be posted into either of those two books. It'll eventually get there, but to start off, it's got to go to a user-defined book. And what we usually do is recommend that you call that new book allocations. And then you're going to go ahead and set up a journal. And you've seen journals out there, APJs for your accounts payable journals, CDJs for your cash disbursements. And you're going to go out there and you're just going to say, okay, anytime I do a dynamic allocation, I want it to have this source for this journal. Allocation entries must be posted into this book, and it must use this journal. And then entries will remain there, or we can move it to the accrual book after it's been done by duplicating it or reversing it, or we can just keep it in this book, but then combine this book with the accrual book so that it's all present on the financial statements. So again, before we start, what we're going to do is we're going to define a pool. Again, what accounts are to be allocated, and we're going to do a fringe account group. We're going to define the basis. The basis is, again, the allocation that's going to be our salary account groups. We're going to define our target. We're going to set a target of being an account 5990. Then it's whatever account y'all are going to do. We're going to define filters. Filters are going to be very important because the filters are going to say, I want you to go out and get all the salaries just for this project. Or I want you to go out and get all the fringe benefits just for this location, just this entity, just this department. You are in total control of that. And by filtering it, again, it will use that filter to go out there, grab the source, and then go ahead and apply all the rest of the deal. We're going to define the dimensions that will be allocated. I'm going to do grants, projects, and departments. And then I'm also going to use employees and bring those in because I'm going to be looking at the employee salaries. Then we're going to define which dimensions should stay the same. Like for instance, locations and employee values, we're not going to want to change. Those are going to remain the same. And you're going to see how some of this might not be understood by you just by reading this or listening to me. And you'll get a better idea when we get it up on the screen. And then finally, we're going to go ahead and post to the allocations book. And I'm going to use that journal that I said that we need to set up, which is going to be called AM Tax Benefit Journal. Okay, so basically what we're going to do, and I'll be bringing up a Sage instance in a little bit, but we're going to go to General Ledger. We're going to go to the Setup tab, and then we're going to set up our account allocation definitions. We're going to assign an ID. It's always good to try to be organized and try to be consistent in how you assign IDs. You might want to do something like DA dash, DA standing for dynamic allocations dash, and then whatever it is that you want to keep it after that. We're going to go over the dimensions treatment. We're going to define where to get the amount to allocate as far as the source pool. Again, we're going to go over the basis amount, and then we're going to tell it where we want to go as far as the targets go. So we'll be going over this in just a minute. I'm going to just go over a few of the screens. This is the rationale section. Here's where you have that allocation ID that I was talking about. You got a methodology where you're going to describe the way that the dynamic allocation is going to work. Just a brief description, and then an attachment. I'm a lot into documentation, and it's not something that we all like to do. It's not something that we're all good at, but it's a necessary evil for all of us to do. Because what's going to happen is we're going to create these dynamic allocations. Everything's going to work great and do exactly what it is that you want it to do. And we're going to go 3 or 4 months and it's going to work perfect. And then all of a sudden something's going to happen. And then we go back to look at something that we haven't looked at for 4 months, and we're not going to even understand the kind of work that we did ourselves. And that's why having documentation and very, very good descriptions is going to be so important. And then it's also going to help when you got your auditors that come in and the people that look at your books and make sure everything's, in the right order and such. They'll be able to see, that you're well organized and they'll also be able to read what you've documented out there and how everything works. Okay, so we got another little polling question up. This one's a little simple. Everybody just be able to click A or B, yes or no.
So the polling question is, do you feel you are leveraging the full functionality of your accounting system? And we'll give you guys just about 30 more seconds or so to get your answers in. Give Hank a chance to catch his breath.
So we got a lot of no's, so that's real interesting. Be really interesting to know why. But I'm going to go ahead and go on to the next slide now. Thank you all very much for participating in the polling questions. I caught my breath, Taylor, so thank you. Okay, so the dimensions treatment section, we're going to identify how we want the dimensions to behave during the allocation calculations and the level of detail that will be included in the created allocation entries. We're going to indicate whether the allocation occurs within a single entity or occurs across entities in companies with more than one entity. And just a real quick note here, if it does go across multiple entities, your inter-entity transactions will still automatically be generated for you, which is a huge plus. And then I got a couple little tongue twisters there, but I made it through that. And then you've got selections made here, help determine how the allocation calculations are created. There's no more limits to how many dimensions you can select. However, the more dimensions you add, the more complex the allocation calculations will be. So our next dimension treatment section continued. We have a few other terminologies here. We're going to have an allocation focus, and we'll go over this. But these are the dimensions that you want to allocate or reclassify based upon the calculation method selected in the basis. We're going to have a per dimension value, and you can see the footnote down there that this selection can only be used with the employee and the department dimensions. And so per dimension value are dimensions you want to allocate or reclassify, but still process a full allocation per individual value. So for instance, employees. For employees, I'm going to want to select per dimension value, and I'm going to take in what's going to happen. We're going to take into consideration all employees. Now, if we don't select a per dimension value and we're messing around with these employees, then we're going to have to create a separate dynamic allocation for each employee. We don't really want to do that, and that's why we had that setting. Preserve values. This is where we're going to keep original values assigned during initial entry as found by the source pool, and then not considered. Pretty self-explanatory there. This will be an option where we're going to just tell it, you don't need to go over the items. You don't need to go over the customers. We don't want them to be considered during the calculations in the generation of the allocation. But they can still be used as a filter to narrow the source pool or the basis. So that's something to take into consideration. Okay, so next we have our source pool section. And this is where we're going to, tell Intacct and define where to dynamically find the amount to use for our allocation. We'll use the dimension filters to narrow down the scope. We're going to use a percentage to allocate that fringe rate. And we're going to set up allocation to auto reverse. Actually, I'm going to be duplicating it so that it gets transferred from the allocation book over to the accrual book. And then we're going to use all standard and custom periods that are already available that you see all the time, current month, last month, previous month. Those are all available for selection, except for inception to date and inception to current month. In our basis selection, you can see that down there, basically, we're just, no pun intended, basically for basis. We're going to have dynamic relative account financial, and we're going to put in our account group. You're going to be setting up account groups for everything, even if it only involves one account. So my fringe group that you're eventually going to see might have 5 accounts in it, whereas my salary account group might only have 1 account in it. But no matter what, we have to set up account groups, and that's fairly easy to do. And then next we have our target entry section. We're going to select a book just in case you don't want to use an allocation book. Maybe it's going to go to somewhere else. And we're going to do the same with the journal. Just because we recommend something like that doesn't mean that you have to do it. We're going to select the target account for the allocated entry. We're going to determine the dimension overrides, and we're going to flag the target lines as billable if needed. This comes into consideration as far as the billable target lines only if you have the grant billing module. But down at the bottom, you can see all we're going to do is pretty simple. We're going to end up selecting a book. In this case, I got commitments, but we would put in, say, our other book that we were talking about, and then our journal entry as well. Okay, so what I'm going to do is right now I'm going to go ahead and just bring up Sage. Some of this stuff I've already got typed in, so I'm going to do this more like editing and such, but I'm going to still go over each of the fields and go through the process with you.
Hank, I'm going to chime in really quick. We did have a question come in. Can dynamic allocations be, we were showing the allocation of expenses. Can dynamic allocations be used to calculate revenue and the related receivable for cost reimbursement grants?
Absolutely.
So, yep,
Yeah.
you can. The one thing to consider with the receivables is how you're actually recording those receivables and getting them out of Intacct, which is something you would discuss with a consultant, perhaps when you're doing the initial design of dynamic allocations, just to make sure you're taking those things into consideration.
That's right. So absolutely, and I should have brought that up, but this goes across the board as far as what I would call your P&Ls or your statement of activity. It includes all revenue accounts and all expense accounts. So absolutely, you bring something in as far as any revenue account, and you can distribute it across all your projects, all your grants, as Taylor mentioned, and so forth. So anyways, I'm in general ledger now. What I'm going to do is going up here and set up, and I'm going to going into my account allocation definitions. The one that I set up, I called fringe allocation. So I'm going to edit it, just bring it up on the screen here. Okay, so you saw this on the previous screens that I was going over. We've got our rationale. We've got our allocation ID, and it's going exactly against the pattern that I said. Normally, I would probably put in here a DA-fringe or a DA, what have you. We've got a methodology. Again, you want to put in as much as you can here. Another description, obviously status, active, inactive. And then you should load up your attachment. I had somebody earlier that said they wrote out and mapped everything up on napkins. Go ahead and scan that napkin in and make it part of your attachment so that 3 months down the road, you know exactly what it is that in the way, the reasons why you designed it this way and the way it's supposed to work. Okay, so then we're going to go ahead where we went over and go through the dimension treatment. We're only going to do this with one entity, but you can click the radio button to go across all entities. For our locations, we're going to preserve our values, and our other choices are going to be not considered or allocation focus, which is what we went over earlier. And I put allocation focus is going to be on the grants and the projects, and then also the departments. And then you can see all the other ones are not considered, which means I'm going to ignore those. And then here's the employee, because I will be looking at their salaries, and we're going to go ahead and use the per dimension value. So then I'm going to go ahead and move on down here to the source pool. And then here we have an account group. And I'll show you this in a little bit, but this account group is the fringe. So it's going to include all my benefit GL accounts. But it doesn't have to be just numeric values that appear on your financial statements, be it activity or balances. It can also be stats, that we talked about earlier. So, it could be square footage of your buildings. It could be the number of hours, that came over from, say, your payroll service. It could be, like I said, if you're a healthcare, it could be, the number of beds that are occupied at the time, maybe the number of meals. And by doing it this way, again, these things change, and you can see exactly a real cost. If this place over here is doing 20 meals and this place over here is only doing 10 meals, we're not going to divide the expenses out between those two places evenly. We want to make sure that we're able to see what's going on. And this is what dynamic allocations provides us. We got the percentage to allocate, which is going to be 100%. We got the current month. These are my filters. And you're going to see that the filter that I'm going to look at is going to be 999. So what's happening here is, so somebody's punching in your journal entries, your accounts payable invoices, what have you, and they don't really know what project it's going to because they know it's going to go across many projects. So they're just going to take it to this miscellaneous generic 999 account. And then what's going to happen is when we run this procedure, we're going to go through all the 999s and then credit this account so that the account goes down to zero. And then we're going to distribute those expenses equally across the board to all the real projects and grants. Then we come on down here to our basis. This is where I said earlier, I'm going to use my salary and wages. So I'm going to total those up. It's going to be into the current amount. I'm going to look at the activity. So it's only what's transpired during this previous month, but you can also do balances. So what's going to happen is it'll take the ending balance as of the end of that month, and it's going to get rid of it and apply it to wherever it is that you want it to go. And then down here, we have our filters. And then I'm going to come down here to our target entry. And what I'm going to do is I'm stating the book, which is going to be allocations. I'm stating the journal that I specified earlier. And all of these show up with whatever it is that y'all have out there. And then we're going to have the account that it's going to go into. And then we've got our last account here. So we've got everything out here. This thing's all set and ready to go. Once you make all the changes, you're going to go ahead and save it. And before my next step, I'm looking at my slides, and that was just to go over the allocation setup. I'm going to go ahead and go to my next slide, of which you guys are having a lot of fun with. So we're going to hit polling question number 3.
Polling question number 3 is, do you give your auditor access to your ERP system? Okay, we got about 27 people that have answered. A few more seconds before we'll close. All right.
Okay, so what I'm going to do now is I'm going to go ahead and generate an allocation. Some of the screens that we're going to see is it's going to ask for a posting date. And that's pretty self-explanatory. Your email is going to automatically come up. And the reason that the email is coming up and says, in case there are any errors or it doesn't fly through the way you expect it to, you'll get emailed a nice little email with the body stating the errors and the reason that you had those errors and such. And then we're going to have our as of date. So this is going to go out there and look at everything that appears as of this date, because that is what's going to be allocated. And then at this point here, is this going to be an individual allocation ID or is it a group allocation? For simplicity and for the amount of time that we have to be able to do this seminar, we're going to do the individual allocation ID. But a group allocation might be, you can have 100 allocations. So I've seen people out there that have, in fact, I was with somebody just the other day and they had over 200 allocations. So what they've done is they put them into a group, and then it becomes kind of easy where you just go ahead and run the group allocation, and it's going to go through each and every one of those. And it saves a little bit of time instead of bringing up each one individually and then running it. And we'll go over that a little bit more later. But you know, here it is here. And if you do select the group, and most of you will, because you're going to have several allocations out there, is that you can go ahead and say stop it if any one of those allocations fails, or you might say skip it and continue on. And that's okay. The only thing that you have to kind of watch for here is if one of your earlier allocations has a target that might be another allocation's source. So then you would want it to stop, because the second allocation that uses, you know, the previous one's target, and I don't want to get too confusing here, you want it to stop because you know it's going to error out. But if you just have a bunch of different easier ones and you have 5 or 6 of them fail, that's okay. You can go ahead and skip it, let it finish out, go in, look at what your issues are, and go back and fix it. And then once we click generate, it's always going to generate a allocation log. And what's nice about this, and you're going to see this in just a minute, it's going to tell us everything that transpired and took place. It's going to show us our source calculations. It's going to show us our target calculations. It's going to show us all our percentages and a couple other things that'll be quite useful for the auditors and other people that look at it. And from here, you know, as I stated earlier, you're also going to be able to review your calculations. I'm going to kind of go through here because we're going to end up seeing all this on the screen, but it summarizes everything as far as the number of transactions that were created, the as of date. It's just a summary of what it is that we run. And don't worry about me going through these that quick, because we're going to bring this up on the screen and you're going to see it live in just a minute. But before then, polling question number 4.
All right, and polling question number 4 is, would you like to be contacted by someone from our team to discuss this topic further?
So that's too many no's. That means I haven't really done a very good job here. Got one yes, that's good. Not sure, you all need to go ahead and make that a yes. But anyways, I'm going to go ahead and go into the next screen here. And what we're going to do is I'm going to go back to Sage. And I'm going to go up to process my, generate my allocation. So I'm going to bring this up on the screen. Here's where it's going to ask for the posting date. We got an as of date, and I know that I got data out here for this particular period. And then we're going to go ahead and select our allocation ID. And that was fringe allocation. And we see that everything else is okay out here. What I'm going to do is I'm going to go ahead and generate it. And what happens is you see all the other runs that we've had up here. But on this top line row here, you see that it's out there in the queen right now being worked on. So I'm going to just go ahead and do a refresh. So what we see here is that it was a partial pass. So let's go ahead and look at why it was a partial pass. It was still successful, but what the deal is some of these other employees did not have salary checks in there. So they did not get allocated in any way, shape, or form. That's why they failed. But I would consider this to be a success. So I'm going to go ahead and view, and let's take a look at this guy. Okay, so what we have up here is our transaction number, our dates, everything that's kind of taken place. I kind of like this option right here. So we're going to pick this option. This will always be there. So if you got an auditor that comes in or anybody, any of your stakeholders that want to come back in and take a look at something, this will show you exactly what transpired during the deal here. So we see that one entity, we see that the allocation focus was the departments and the grants. We preserved our location values, everything that's up here. Here is our source pool. I'm going to just go ahead and click this account group real quick here. And then I'm going to look at my hierarchy. And this will show you that it's gone out there and grabbed amounts for the 4 accounts that I added to this group. Doing this to the current month. And the other thing that's kind of nice is we can go ahead and look at what the source pool calculation was. So what this does is it's going to go ahead and download a spreadsheet, and hopefully I can quickly go ahead and pull this thing up where I've got it saved over here on another one of my screens. And that was source. So what we see here is it went out there and it found for the fringe benefits, these 2 amounts, $2,000 and $700. It only looked in the departments and the grants that I decided. You also see this 999 account, which was one of our filters, and this is the amount that it pulled out. We can go ahead and see what our basis was real quick. I'm not going to click this. I've already saved the spreadsheet knowing what was going to happen, but it's just going to go ahead and do what it did on the source there. And I'm going to bring my basis over just so you can see what that looks like. And we see here that it went through there, totaled up all the salaries for this particular guy, and it pulled up the 1155 and the 1144. And then next, we can actually see what the percentages was that it calculated out. So we see for this department and this grant, a little bit over 50%, and for this department and grant, a little bit less than 50%. So that's exactly the percentages that get applied. So real quick, if I just bring over this last spreadsheet real quick here, I highlighted in red this big journal entry that included this employee and everything that covered out. We had those 2 payroll amounts, which I showed you. That is the total. If I take each of these and divide it by that total, we can see the percentages that you saw displayed on the screen. And then we're going to multiply that out against the fringe benefit totals. And then it's going to come up with these 2 amounts, which is exactly what it did. But I just put this out here manually, but all of that was done, you know, automatically, just like it says. It's dynamic, and it took care of all that for us.
I think just to give
Okay,
you
so
a time check, we're at 10 minutes left till the top of the hour.
10 minutes to the top of the hour. All right, I'm busting through. I'll put it in 4th gear. Okay, so next we're going to have, this is where once you're done, you have 2 options on the way that you want to go ahead and post that entry. You can duplicate it and send it to your accrual book, or you can combine your allocation book with your accrual book so that that entry is going to end up being in both of those. Okay, now best practices, and I'm going to go through this quick for managing and maintaining your dynamic allocations. You need to do regular reviews. So you got to periodically review your allocation rules and still make sure they're performing the way that today's data is as compared to the day that you designed it. You're going to always do some consistent data validation to make sure that you're not having any errors and that everything's working the way it was. Obviously, you're going to do some comprehensive training, make sure all your staff understands it. Documentation, documentation, documentation. I'm a big fan of that. Automation, totally where possible. You got to leverage Sage Intacct's automation capabilities to minimize that manual intervention. And when doing so, you'll be less prone to errors. Make sure that all your stakeholders know everything that's going on as far as what's taking place. And again, we can go back to the documentation. We're going to monitor the performance, and we're going to stay updated. Make sure you keep up with all the updates that Sage Intacct puts out there, and you want to utilize any new capabilities that can enhance your allocation processes and ensure that you're using the system to, its full potential. In summary, Sage Intacct, it automatic calculations, which is going to reduce your manual effort and potential for errors. You're going to get real-time insights by everything that's calculated. You're going to be a lot more exact on everything that's taken place on your books. It's very flexible as far as all the allocation methods and criteria that you saw. Very consistent, and it's easily scalable. So if you have anything you need to add, anything that changes, you can just go back and adjust your rules. And we have some more upcoming events, and you can see these, and everybody's going to get a PowerPoint presentation. So you'll be able to have these on file. And were there any further questions?
No open questions in the queue. We'll give everybody another minute or so in case there's some that come in.
Or anything that you might want to see extra.
Mm-hmm.
The only thing I didn't show was a transaction allocation. And if somebody wants to see that, we could do that.
Well,
okay, no questions.
Yep. Thank you all so much for attending. Feel free to reach out if you have any follow-up questions, or if you have any interest, want to learn more about either one of the allocation options we talked about today, and have a great rest of your day.